NASDAQ chart, there's really not, right? If you look back here, there's really nothing back here that's really that important. But if you look at, here, let me just switch it back to the E-mini S&P. If you look at how manipulation works in the market, manipulation that is, right? Manipulation is not always what you think it is. Manipulation can happen in all different forms. It could be based on news, it could be based on something else. But there's something that not a lot of traders think about when it comes to manipulation. Take, for example, this idea that you're buying and then somebody else buys and then the same person buys again and then your neighbor buys and then grandma buys and then Joe down the street buys. Everybody's buying, and you have to consider what's going to happen when these traders say it's time to take profit and sell because they've pushed the market up a certain distance. Whether this is 5-minute chart, 1-minute chart, at some point these traders who bought and bought and bought and bought are going to sell. So the example that I like to give is when you enter into the market and you're accumulating, you're entering maybe with 1 or 2 or 3 all the way up, and you've accumulated a nice amount of contracts. But when it comes time to sell those contracts and take the profit, you don't want to get out the same way. You don't want to sell 1 or 2 or 3, slowly getting out. You want to say, get me out of this trade and sell everything and just click exit or close or get out. And when that happens, you typically see a huge move in a very short amount of time against you, or a reversal. We know that this happens because people buy and people sell and traders accumulate and they take profit. Usually the market, when it's time to take profit, it happens faster and harder than and much stronger than the way that you accumulated, right? So maybe you're averaging in. Averaging in is, you buy and then the market goes up and you buy again, you buy again. But when it's time to take profit, it's always dump it, right? You're dumping it. So how do we prepare ourselves for that type of manipulation, right? Because it could happen anytime, and it's not so much manipulation where it's something that you can count on, or maybe it's a double top or double bottom. It's time to take profit. Let's just get out of this trade now. Exit all at market is usually the term that when you call your broker in the past, you would say, close out my positions, get me out of the trade. So now you just click a button. So there's a software that is based on manipulation, and that software is the roadmap. And this roadmap software is only offered in mentorship, and it's here. Let me see, where is it here? It's the DayTradeToWin roadmap. I'm right over here, roadmap. And there's nothing you have to do, right? You just add the software, and it calculates everything for you, and it has entries to go long and to go short, and it's all based on manipulation and where the market is going to pause, stop, reverse, and be careful. So pause, stop, reverse, and be careful. When the market reaches a roadmap zone, one of these zones, I try not to go against it. Because what happens, and to kind of the technical side of things, is they're selling, right? So they're selling, and they're selling, and they're selling, and they're selling some more. But wait, here is where they're going to take profit. And the same thing is true. They're buying, they're buying, they're buying, they're buying, they're buying. Inside the roadmap zone, when it touches it, is when they say, dump it and get me out. So the idea behind the roadmap zone is to first filter out trades. Number one, if it lands in this roadmap zone here, and the market's going up, right? We talked a little bit about where it's coming from and where is it going. It's coming from below. It's coming, it's coming, it's coming. Hits the roadmap zone. Try not to go long until it breaks through the zone. And the same thing is true here as it goes down and down and down. It trades inside the zone. Here it even touched the outside of the zone. What happens? Immediate reversal. So use it as a filter first, right? So some of you have the roadmap because you're in mentorship, and you know that I always say, the roadmap comes first, filter out any signals with the roadmap. Now, in addition, if we have, traders saying sell and sell and sell, and now buy back everything, just get out of my trade and just buy it back, why not take advantage of that? Why not instead buy with them, right? And so you're going to see signals to go long and to go short. Here, let me remove here the trade scalper for a moment so you can see the roadmap a little bit clearer. As the market goes up and up and up and up and up, it lands in the zone. And if you're able to go short, you're going short because it landed in the zone and reversed. And again, we talked a little bit about pivots in the beginning, where I said use the pivotal stop as a way to get out of the trade with a smaller loss, or even outside the zone, right? Same thing, the market's going up, so traders are buying and buying and buying and oh, hits the zone, no long trades. And it kind of stayed here inside the zone, and then it finally came out. So the signal that you're seeing roadmap short is because it landed in the zone and it's starting to stay or reverse, or it's starting to come out of the zone, or there's enough proof or evidence that the market stopped and it's starting to reverse. Now, obviously, I don't want to hold on to this forever, so it kind of went sideways for a while and went down a little bit, but I want to see hit the zone and then come out immediately. Let me see if I can give you a bit of another example. So here's another example, and I'm not picking and choosing, I'm just kind of scrolling back as I see it. Market's coming from here, it's coming up and up and up, so you're buying, and you're buying, and you're buying, and you're buying, and you're buying. Oh, it hit the zone. Give it a minute. It may just go through the zone. In that case, you can just buy it again or continue on your position for a long opportunity. But if it doesn't, you have here 1 candle, 2 candles, 3 candles, 4, 5, 6. They're all stopping as soon as it hits the zone, almost as if there's some magical resistance. And it's not magic. It's more manipulation to the degree where traders that have bought the entire way up are now unloading. They're taking their profit, and that causes the reversal. And maybe you can even take advantage of it by going along with it. And so that's what the signal is here for. So the roadmap, the way that we teach it in the mentorship classes, is use it as a filter first, and then what we do is we use it as an opportunity if it exists. Only if it exists, only if it lands in the zone and starts to reverse off of it. Let me see here. So here's an example of a losing trade, right? So here's a roadmap long trade. This is 5 o'clock this morning, where it hit the zone and it stopped, right? So I don't really want to go short, but then it continued and it had this signal. Well, the stop on this specific trade is very small. Whether you use as soon as it comes outside of the zone or you use a pivotal stop, the stop is very small. So what we try to do is we try to time it as it comes in, looking for that. And if it doesn't happen, get out of the trade. So you're looking for a way to get in and get out, small losses or small stop losses. And I mentioned this before. Let's say, as an example, I'll take this example right here. Let's say, for example, that there was a candle that looked like this, really big. Here, I'll just make it obvious, right? It looks like this, one large candle like that. Well, if you enter here, and this is your pivotal stop here, or the other side of the zone, when it breaks through the roadmap zone, and goes through it, that's also an indication to get out. If this from here to here is too big, it's just too much of a distance, you don't even take the trade, you skip the trade. So overbought, oversold, that exhausted idea I mentioned earlier, consider that before entering into a trade. We always want to enter in the beginning. So if it lands in the zone and starts to come out, whether it's a pullback trade or strength trade on the Atlas line, whether it's the roadmap, it's any type of counter trend move, what we're looking at is entering at the beginning and taking it up from the beginning and having your pivotal stop as an opportunity to help you get out at a smaller loss. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.